Hello guys, Apple just reported earnings. In this video, we'll react to the latest earnings report from Apple. We will talk about what we like and dislike about this company, and in the end, we will define what should be the price to pay for the Apple stocks. So, if you are curious, let's continue with this video. So, Apple reports better than expected quarter driven by iPhone sales. So, in this earnings report, they just report their revenues were better than expected, but however, Apple overall sales fell for the second quarter in a row. This is important, guys. It's a second quarter where revenues came down from Apple. That's difficult. That's gonna import on valuations. Even though we are seeing a bit and their earnings are better than expected, this doesn't mean that that's a good report. So let's continue. Their better earnings came from a stronger than anticipated iPhone sales. So they just beat earnings per share 1.52. It was 1.43 expected. Their revenue came into almost 95 billion. It was expecting around 93 billion. That's good. Their gross margin improved. That's really good. In this environment, it's really difficult to maintain their margins, and Apple is doing an awesome work. So that's a positive point. Their net income during this time, this year it was 24 billion. And last year they earned 25 billion in this quarter. So iPhone revenue came higher than expected. The rest is coming in line or under. Other product revenue, it's over. Service revenue came in line with what was expected. So they didn't provide any more guidance. So now the stock is reacting good. Is up 0.9%. In my opinion, I'm surprised in the positive side for the report. They just beat expectation. A negative trend is that revenue came down for the second quarter. Revenues are decreasing quarter by quarter, but that's normal because the fourth quarter is generally a really good quarter for Apple, and now it's normal to the revenue came down. But the gross margin, they continue to maintain their high gross margin, which was good. And overall, I believe it's a good report, but there is a problem. Apple is their valuation is almost they need to be perfect on the report, and I do believe they needed more, because valuation at the moment it's really high for Apple. If you look at their PE, they are trading around 28 PE, 25 forward PE, which is really high. For instance, Apple normally trades at PE around 17 to 22. They are almost at their highs. I believe their all-time highs were around 180 in the beginning of 2022, and now they are trading at 165, 167 at the moment. So their valuation is really high, so they have to be perfect on the report, which they were not. To continue to improve their valuation, they have to be perfect, and they have to grow a lot, and the revenue are coming down. Analysts are expecting to this year to the revenue to come down 1.5% for the year, which is really bad for Apple after they have the last 2 years were perfect. They grow a lot, 40%, 43%, but now the have been difficult to continue their growth. So that might be a problem. And if they want to maintain their valuation and the stock price, they have to grow a lot and continue to improve. So what we like about we don't like about the valuation, that's IP. We don't know. That means nothing. If they have a high growth rotation, that can be a value stock. But we are here to do our analysis. So let's continue. Things we like: they have been growing a lot. They are growing around 11-12% a year in the last 5 years. They have high margins, high gross margins, around 43%. This is really high for a company who sells consumer electronics. It's not it's a technology company, but they sell goods, so they have really good margins. Their net margins and free cash flow margins are around 25%, which is really good. They have a lot of cash, but they have some long-term debt, but they can pay their debt with 1 year, 1.5 year of their cash flow, so it's a really good and manageable debt. The return on invested capital is really high, almost 60%. There aren't much companies that can have this return on invested capital, especially with a high market cap as Apple. They pay a dividend, 0.5% dividend. It's low, but it's a dividend. They do a lot of buybacks, so really like their revenue growth, their margins. They have manageable debt, which they can pay with almost 1 year of their free cash flow. They have a really high return on invested capital, so they deserve a big premium on here. They have a wide moat. They have in free cash flow positive for the years that have come in the past. So they return capital. Apple has one of the best management teams in the world. Tim Cook is it's one of the best CEOs out there. They have been doing a lot of buybacks. They are doing a small dividend, but so until now it's all checkmark. But let's talk about valuation now. Let's do our discounted cash flow. The report was good, but what is the price we should pay for Apple? We really like the company. We really like Apple products, but we are here to make money. So should we invest in Apple? Let's do. So for our analysis, for our base case, I'm assuming 26% margins. The last year margin was around 25%. In 2021 it was almost 26%, but I believe for my base case, I believe they can improve their margins, but let's try to be a little bit conservative. So what should be our growth rate? I'm doing 8% growth rate for the next 5 years and 6% for the rest. Believe Apple is a big company. It's gonna be really difficult for them to grow. So if you bear in mind, analysts are expecting their revenues to even go down this year and to grow around 5% in 2024. So I'm not being a lot conservative. I think it's a fair assumption. So I'm doing a little premium in ATP. I could do 20 or 22, but we are here to be conservative and trying to find a price to where we like to pay. So an ATP, that's important to use some kind of you should do around the same when we evaluate and compare companies. So in my other discounted cash flow and stock analysis, I'll try to do close to each other. That's what I believe Apple can grow. I'm doing a little premium because Apple is a really good company. Maybe we should do a higher premium, but let's continue with that. 12% discount rate. Let's assume some margin of safety. For my bull case, I believe if Apple could grow around 10% and 8%, they could improve margins around 28%. If that comes through, I want to earn around 14%. For my bear case, their margins come down 24%, 6 and 4% for the compound growth rate, and P around 16, a discount rate around 10%. And for that assumptions, Apple stocks is worth around $70. I'm being conservative. That's a really good company. Maybe we should do a higher PE. Maybe they could grow faster, especially than they are coming into India, which is a big market. As long as we see India growing and their populations having more money and their economy starting to grow, they can buy a lot of Apple products, and then that can improve their revenues and their margins. So that can be a good catalyst for the stock. But doing a conservative analysis, our intrinsic value, our value for Apple will be around $70. I believe if we reduce our margin of safety and we assume a bigger premium on the price to earnings ratio, the stock could be worth around $100. But at the price we are seeing now, around 165, I'm not interested in buying Apple. I know that Apple is one of, it's the biggest company in the market, is one of the most is one of the favorites among investors. So I really like the company. I would like to own it, but at a fair valuation. Now we are trading at a higher range of their price to earnings ratio. As I told you, Apple usually trades around 16, 17 PE to 20 PE. So it's a really good company. They just beat expectation, but expectations were low for this company, and it's expecting them to reduce their growth. Their revenues will be going down this year, and it's gonna be difficult for a company as big as Apple to continue to grow at this rate. So really good company, really good management, all check marks except valuations. I will be patient. I hope one day I can buy Apple at a fair price, but for now I'll be just waiting. So that's our opinion on Apple stock. I hope you liked it. I hope you find it useful, and if you like this analysis, so please subscribe, guys. Bye.